Hey everyone, welcome back to Corporate Decoder, the place where we untangle the real stories hidden in corporate filings. And today, First Citizens Bankshares is spilling the tea on their latest results. So get ready because we're diving deep into their financial report. And let me tell you, there are some interesting numbers to unpack. And hey, before we jump in, if you love getting these clear, no-nonsense breakdowns of company reports, hit that subscribe button. Also, join our Discord community for more real-time discussions. The link is right there in the description. Alright, let's get straight to it. The 23rd of January 2026 is the date that matters here. This filing is all about First Citizens Bankshares, Inc., talking about how they did in the last quarter of 2025, the one that ended on the 31st of December. Think of it as the company's report card for the very end of last year. This is the official name of the company we are looking at, First Citizens Bankshares. They are incorporated in Delaware, which is pretty common for big companies. Their stock ticker symbol is FCNCA for their class of common stock. Trading on the NASDAQ, they also have preferred stock, Series A and Series C. Trading under different symbols. That is where their stock is traded on the NASDAQ Global Select Market. It is a big deal, a major stock exchange where you find a lot of well-established companies. So their performance matters to a lot of investors. Now this section and the next are the heart of the filing when it comes to understanding their performance. They are announcing their results of operations for the quarter ended the 31st of December 2025. Essentially, they are telling us how much money they made, how much they spent, and basically their overall financial health at the end of last year. They've attached a press release, Exhibit 99.1, and a financial supplement, Exhibit 99.3. These are the detailed documents where all the numbers are laid out. Think of them as the company's official announcement and the detailed spreadsheets that back it up. They've even put them on their investor relations website, which is standard practice. This part is about how they're sharing information with everyone. Regulation FD, or fair disclosure, means they have to make sure all investors get important information at the same time. They are holding a conference call to discuss these results, and they've even attached the presentation slides Exhibit 99.2. So they are being transparent about their earnings call. This Exhibit 99.1 is the press release. It's the first place most people will look to get the headline numbers. This is usually where they highlight their key achievements and financial figures. Exhibit 99.2, the investor presentation, is likely to have charts and graphs that visually explain their performance. It's designed to give investors a clearer picture of the company's health and strategy. And then to raise Exhibit 99.3, the financial supplement. This is where you'll find the nitty-gritty details, all the tables and numbers that an analyst would pore over. This is a treasure trove of information if you really want to understand the company's financial standing. Now this last exhibit, 104, is a bit more technical. It's an interactive data file. Basically, it's a way for them to tag all the financial information in a way that computers can easily read and process. This is what allows tools and analysts to automatically pull and analyze their financial data. It is a step towards more digital and accessible financial reporting. This is a really important section, even though it can sound a bit like legal jargon. This is where they talk about what they expect to happen in the future. They use words like anticipates, believes, expects, and plans. It's crucial to understand that these are predictions, not guarantees. Things can change. And what they say here is a way to protect themselves legally if those future predictions don't come true. This sentence really tells you what you need to know. They are basically saying that the future is uncertain. Lots of things can happen that could make their predictions wrong. They are setting expectations that things might not go exactly as planned. This is the core of the risk disclosure. They are warning investors that the actual results could be very different from what they are hoping for or predicting. This is crucial for any investor to read because it highlights the potential downsides. Here, they are talking about external factors that can impact their business, like trade wars or restrictions. These are things that are outside of their control but can significantly affect their profitability and operations. This is a big one, especially given recent events in the banking world. They are acknowledging that the health of the entire banking sector, including potential failures of other banks, can create instability and affect their own business. This highlights a critical modern risk. Data breaches and cyber attacks can be devastating for any company, especially a financial institution. It can lead to financial losses, reputational damage, and regulatory fines. This points to ongoing regulatory scrutiny and potential costs. The FDIC special assessments and increased premiums are direct expenses that can impact their bottom line. Changes in capital requirements can also affect how much money they can lend or invest. This tells us that acquisitions are a key part of their growth strategy, but they also come with risks. Integrating new businesses can be complex, and there is always a chance that those deals won't pan out as expected. The acquisition of branches from BMO Bank is a specific current initiative they are watching closely. Finally, we have the signature. This is the formal part where the company's authorized representative signs off on the report. This is Craig L. Nix, the Chief Financial Officer, signing the report. It signifies that he, as the CFO, attests to the accuracy of the information presented in this filing. It's a formal stamp of approval from the highest financial authority within the company. Now, let's talk about the actual financial story here. While this filing doesn't give us specific dollar figures in this particular text, the fact that they are releasing earnings and a financial supplement means we should be looking for details on revenue, profit, loan growth, deposit trends, and their overall capital position. Typically for a bank, key things to watch are net interest income, which is the difference between what they earn on loans and what they pay on deposits, and any provisions they set aside for potential loan losses. Given that this is a report for the quarter ending the 31st of December 2025, we'll want to compare these numbers to the same quarter in 2024 to see if they've grown or shrunk. We'll also look at trends quarter over quarter. Are they seeing an increase in the amount of money they are lending out? Are their deposits growing steadily? Crucially, how are they managing their expenses and provisions for bad loans? The statement about risks related to bank failures and market volatility suggests they might be navigating a challenging economic environment. The mention of acquiring 138 branches from BMO Bank is a significant strategic move. This could boost their physical presence and customer base, but it also means integration costs and potential challenges in making those branches perform. Looking at the risks mentioned, the ongoing regulatory landscape, especially around banking stability and costs like FDIC premiums, could put pressure on their profitability. Cybersecurity risks are always a watch item for financial institutions. On the bright side, the company is actively pursuing growth through acquisitions, which, if successful, could lead to expansion and increased market share. The fact that they are a publicly traded company on a major exchange like NASDAQ means they are subject to a lot of scrutiny, and their performance is constantly being evaluated by investors. So, what is my take on this? First Citizens Bancshares appears to be navigating a dynamic financial environment. Their strategy involves growth through acquisitions, which is a bold move in potentially uncertain economic times. The risks they've outlined are legitimate and require careful management. Their financial health will depend on their ability to integrate new branches effectively, manage interest rate fluctuations, and maintain strong capital levels, while also dealing with regulatory pressures and the ever-present threat of cyber threats. They have clearly laid out the external factors that could impact them. From global economic conditions to specific regulatory costs, that's our deep dive into this First Citizens Bancshares filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more. Thanks for watching. See you next time.